we are looking at NFT's trading platform, Blur, new product Blend, which has captured $308 million in loan volume in just 22 days, seizing 82% of NFT's lending market share. Joining us now to discuss the data is DappRadar Web3 analyst Sara Gherghelas. Welcome, Sara. So, Blur and Blend are two really interesting, dynamic, bright spots in the not particularly dynamic and bright market, right? So, there was a lot of commotion when Blur first sort of burst out on the scene. Now we see Blend also kind of shaking things up. And its first weeks of operation, Blend saw its total loan volume rise. Could you just sort of unpack this growth for us? I mean, this seems, relatively sudden, a relatively new player coming in and really shaking things up when not a lot is happening in the NFT market.
Yes, first of all, thank you for inviting me. So hello, everyone. Yes, so yeah. So actually what happened with Blur was exceptional. In my point of view, what they did, it's a platform that is relatively new. They started to dominate the NFT trading volume, and right now they are actually dominating also the NFT lending industry. And that's incredible because right now in just 22 days, as you said, they have a loan volume of 308 million, a value that a lot of the NFT lending protocols took years to have. Just NFT fee is the first lending protocol, and they in just 3 years managed to have only 400 million. So you can see the difference. And in my point of view, this is incredible. But what they are doing, I'm just repeating myself, but yeah. And this is going to be like a very big player in the industry, definitely.
So Blur's whole thing is that it kind of appeals to more professional NFT traders, whatever that means. Could you explain to us like what Blend, like who's using Blend, like what is NFT lending all about? Like who's the market for that? Why are they doing it? What's the point? Like, can you just break down like what NFT lending really is and who is the target demographic for this product?
Sure, definitely. So NFT lending is exactly for NFT pro traders, right? Just imagine that you have this cool asset and you want to, put your assets into collateral, and then you're going to have more liquidity and you can make trades based on the market volatility. You can make money and then you can repay your loan. It's exactly as you do with the house, right? If you want to invest in real estate, you buy a house, the price will increase, and then you're gonna, sell the house and you're gonna make like a 10% profit, which is good money. And this is what this NFT lending protocols are doing, because right now NFTs are seen as security. And I do remember a few months ago, there were a few questions. Are NFT, and especially the Yuga Labs NFTs, are becoming securities? Are they will becoming assets? And I think this will answer your questions. And when it comes to the users, actually, there's not a lot of user going into Blur or Blend. Right now, we are selling on average like 300 daily active users, which is not a lot, but these users are whales, and they have as we saw, they have a lot of money, and they are making a lot of money using this. Yeah,
they're using NFTs as collateral. What kind of safeguards does Blend have to stop people from wash trading, to raise the value of that collateral and then borrow against it an overinflated collateral, the NFT, if you will? In other words, you do a bunch of wash trades several times over. Now you have an NFT worth millions of dollars. You turn around, you borrow against it, and you can take on massive amounts of trades using phony collateral, which you brought up the real estate market. This would be called mortgage fraud. So what's to stop that from happening here?
I think, to be honest, as of right now, we are at the early beginnings, and I think we cannot stop this. And I I'm holding accountable, like when Blur or Blend of what they're doing, because right now I feel there's like a market manipulation of the NFTs. Actually, in the past week, we find out like 19 million were wash trading, and I think there's a lot more coming from the platform. And we saw what happened on the 21st of May, where a lot of NFT collections, blue chip NFT collections, were dumped due to the incentivization of the airdrop on the second season of Blur. So as of right now, I don't see they are doing anything else for this. Maybe I'm not aware, but we are actually looking at this manipulation. But what we are doing, we at DappRadar, we are looking at wash trading, and we are not counting that into the trading volume, right? And we are careful. Yeah, sorry.
But does the low number of people that are using the app, that are using it, the platform, does that raise any red flags that this could be going on? Just because it's such a low number, it's several hundred people, yet 82% of the volume. It kind of makes you think something is going on. No.
Yeah, they are. And that's, as I said, is the incentivization for the airdrop season 2. Because if you use Blur, if you use Blend, you're going to have a much higher loyalty ranking. You're going to have more points. And when the airdrop on season 2 will come, you're going to have more tokens and you're going to make a lot of money. And exactly, we can see on this visual that right now on Blur's activity just in May, we can see that right now it's being used more on loans than on NFT trading.
Mm-hmm.
So, I mean, just given what we're talking about now and the market manipulation, do you think that we're going to see U.S. regulators look at NFT-Fi, look at these new products around NFTs through a magnifying glass?
I think this is a consequences, and this could be beneficial for the market because, as I said, there was a conversation in the past and a conversation that will be probably in the future again, if the blue chip collections or the NFT collection could become assets or securities and can be put out collaterals. Definitely in the future, we're going to see more regulation coming from this, because we are talking a lot of money. We're talking about a lot of loan volume, and definitely, I'm just waiting like 1 or 2 months, and probably the first breaking news on regulation will come on NFT lendings as well.
Is this a trend that you think we're going to continue to see? I mean, we talked about the users being really low, but it's like a few whales getting in on the action, which is kind of similar to most new products in the DeFi ecosystem. Is this a trend we're going to see in the long term, or is this just whales doing their thing?
I think it's going to be like a long term, to be honest, just because this trend has been since, I don't know, NFT-Fi was back in May 2020. So we have like 3 years from now. And right now, more people are talking into this, and they are seeing the benefits of NFT lending. So this is definitely what we're going to see in the future. And I think for more people to get actually into this is that the collection used have to be some collection that will have a very low floor price. Like, for example, on Blur, one of this collection was Milady Maker, which had a lower floor price, and we saw that a lot of people were trading that collection because it was more accessible, and a lot of people were not taking loans or collateral on CryptoPunks, which has a higher floor price. But yeah, definitely this is a trend that definitely will stay. In my
Sara,
point of view.
Thank you so much for joining us this morning and sharing that data. That was DappRadar Web3 analyst Sara Gherghelas.